All right. We're all good to go. So let's get to it, gang. We got a lot to cover. Thrilled that you're here. Who's excited for this year? I know I am. So let's get to it. Tonight's conversation you and I are going to have is all about you getting what you want out of your trading life. Who's in? Okay, let's get to it. I think there's a few folks that are still having some audio issues. All right. They're working on it. They're working on it. Okay. So before we start, let us bear in mind that there are no guarantees with trading or just about anything else you can think of. Trading is indeed risky. Do your homework. We're going to be talking about the kind of homework I do in today's presentation. Tarek says, what? No guarantees? Well, I'll guarantee you're going to learn something tonight. That's for sure. All right, so why are we here tonight? Many traders are not seeing growth in their account. That is what we're all here for. How do we grow our accounts? A lot of times traders are losing a lot more than they're winning. Or worse, they are blowing up their accounts. This is unacceptable. We're going to work on this together here today. After all, trading is really hard. Let's face it. Most traders fail. We know the statistic. 95%. There are a lot of moving parts in trading. Who hasn't learned that? Wow, there's a lot to take in, a lot to calculate. It can be confusing. And worse, trading alone or listening to too many people is not helping you get to your goals. Who says I? Yep, that's where I am, Rog. Maybe all five. You're not alone. So what are your trading goals? Have you thought about that yet? Have you thought about what your goals are? Maybe it's freedom. Maybe it's control over your time. I know that's a big one for me. Your location, where you're going to be trading from. Obviously, income. You want to be comfortable with risk. You want to sleep well at night. You don't want to be agitated. You want to be able to make your own decisions about your own money. You want to be self-directed. No boss? Sign me up. Credentials, permission. You want a chance to directly see the results of your decisions. That's the goal, right? Financial independence. All right, where else can you go where there's theoretical upside that is unlimited? Well, and legal, right? Unlimited upside. Understanding what you want is the first step to actually achieving it. And I know that might sound obvious, gang, but a lot of traders don't start off with establishing their trading goals, not just money, time, location, everything we just discussed there. So how do I know this? All right, Rog, where are you coming from? Well, I started trading over 35 years ago. And by the way, I started with a really small account. I had a $1,200 account. Feels like a long time ago, but I started with a small account. So I totally get the how do I start with a small account perspective. I get where you're sitting if you're with a small account. I get where you're sitting if you want to grow it. I've been there because I spent lots and lots of hours, weeks and years being disciplined to learning what seems to be the endless moving parts of trading stocks, options, futures, and a whole lot more. Forex, crypto. I understand there is a lot to learn. Been there. And if you want to learn how to succeed in trading, you're going to have to learn the things that move the needle. I wanted the unlimited earning potential. That was a big thing for me. One of the things I knew very, very young is I wanted to be able to take care of my mom. I wanted to be able to take care of my sister. I wanted to be able to take care of my family. And I know that many of you probably have similar goals. You want to be able to help out. And I know that trading was the path for me. I saw what could be done. I saw what could be had. And I wanted that freedom and sense of control that many of you are seeking. Again, been there, done that. It drove everything that I did. I consistently grew my trading account now to trading 6 and 7 figure accounts. It didn't happen overnight. That's where I sit. So 5,000 to 25,000 to 500,000. Keep this in mind as we go through this presentation together, gang. The strategies are exactly the same. All right, my biggest trading goal. I wanted to be I wanted trading to be my full-time job. I didn't want to work full-time, but I wanted it to pay the bills, right? Full-time meaning I want to make enough money to pay for my life, my bills, savings, the goodies, right? Or loved ones. That was a big deal to me, right? Being able to tell my mother, you're retired now, I got you. Being able to tell my sister, you found a home, I got your down payment. Those were really important things to me. So along the way, that's what I wanted for my trading. And ultimately, what I've come to is working about 10 hours a week or 2 hours a day. Now, this is not about 8-minute abs. It's about effectiveness. I wanted, attained, and have maintained trading being my full-time income for over 3 decades, right? And I know a lot of you want to be able to rely on your trading. That was my goal too. I have been consistently profitable every single year. Now, by the way, that doesn't mean massive profits every single year. That means that on January 1, whatever was in my account, I had more in that account on January 31st. Some were huge years, some were not so huge years, but I've remained consistently profitable every year, meaning, again, I have more money at the end of the year than the beginning of the year. And by the way, I've never blown up an account in my entire career in that path. Never blown up an account. All right. It looks like the audio issues are sorted out. Sorry, gang. I'm kind of keeping an eye on the chat too. I think we've got this sorted out, hopefully. Okay. All right. So do I have to be a full-time trader? Again, remember what we define full-time as. It's not hours, it's income. And absolutely not. Trading does not have to be your only or primary job, right? There's a lot of other things you might want to do. You might want trading to supplement it. Many traders do want that supplement, right? They want to supplement their income. They want to grow their savings. They want to manage their IRAs. What traders want out of their trading lives is as varied and vast as it is achievable. And I truly believe that. It takes some strategy and steps, but I truly believe you can achieve those goals. Another beautiful part of understanding how trading works, and this is very big, is how it can fit into your life and your schedule. That's super important. You can't fit your life into an unrealistic trading approach. Again, think back to your goals, think back to the time you have available. This is really going to be something that has to be the foundation of where you go as a trader. Everyone has reasons for wanting to trade, right? It can be different, and that is okay. And let me show you why. Time frames and asset classes. All right. So let's start off here. Day trading focus. What is a day trade? A day trade is simply when you're getting in and out the same day. It's a today trade, right? You're in and out the same day. Personally, I dedicate the first hour of each day to finding setups. Between 9:35 and 10:35, I am solely focused on day trading. We start off looking at some basic information around 9:20. The bell rings at 9:30 and I'll trade to about 10:30, 10:35 a.m. That's it. That's my day trading focus. Remember we talked about schedules and times? That's how I schedule mine. Day trading moves quickly and needs your undivided attention. That's why I don't do it all day. I focus on an hour. You can't sprint all day. So we focus on the first hour. For day trading, asset classes and requirements. So we're just talking about day trading here. I focus on options and futures for day trading. So it could be the option of a stock, an option of an ETF, the S&P, the NASDAQ, gold. Another thing that I want to mention is I do not use Greeks. Whoa, hold the phone, Rog. What do you mean you don't use Greeks? But everybody uses Greeks. I have never, ever used Greeks, right? I trade calls and puts in a cash account, right? Now, for day trading, I would suggest a minimum account size of $5,000 to $7,500. Can you deal with more? Sure. Can you deal with a little bit less? It's going to be tough, but this is a pretty good sweet spot to get started. The idea is to grow from there. All right. So how can you work your trading goals into your trading life? Again, understand the time frames and asset classes. Everything we're talking about tonight is what we do every day in the Sector Secrets Mastery, where I share my trades, strategies, and tools every single day with hundreds and hundreds of other traders. This is where we use various time frames. This one was discussing day trading, asset classes, whether that be options, stocks, futures, right, to reach our trading goals. We'll talk much more about this later. All right. So this is how I start every morning. Okay. Swing trading. Definition and time frame of swing trading. It's really important that we understand what the style is that we're talking about so we're all on the same page. So for me, swing trades are trades that are held a few days to several weeks. It's kind of a good guideline is say 2 days to about 2 weeks. It could be a little bit more, but that's a really good general guideline. And I'm going to focus on finding swing trades, not just taking them, but finding them between 10:30 a.m. and 11:30 a.m. every morning. So remember earlier I said I do about 10 hours a week. It's about 2 hours a day. First hour is day trading. Second hour is swing trading. So again, we need a process. How do you best set yourself up for success in swing trading? And for me, that starts off with building a watch list on Monday. One of the worst things I see swing traders do is continue to change the symbols that they're looking at day after day. They're going to miss trades because they're always chasing news or some sort of rumor or gaps, right? So on Mondays, we do an old school watch list building process, one that I've been doing for decades. And I don't need to use a scanner or anything, right? We look for relative outperformers and we identify those every Monday. What kind of instruments can you use? Well, options, futures, all I'm typically going to do, and I recommend this for beginning traders, is start with getting good at buying calls and buying puts. Again, we're going to hold them overnight. Somebody asked, what's a Greek? A lot of fancy math. It's a lot of fancy math, right? If we can understand price, time, volume, volatility, you don't need Greeks. Listen to me now, believe me later. Keep it simple. The other thing that really makes a difference with what we do is alerts and flexibility. Not only do I send out alerts to Sector Secrets Mastery members, but I place alerts on my platform to track my entry levels for me. And that gives me a lot of flexibility because we have our full trading plan, our full trading setup alert before we enter the trade. That gives us time to understand the trade, time to decide. And I and anyone else who's watching these, you don't have to be at the desk. Remember, I don't want to be glued to the screens. All I've done is given myself a job. Freedom was a big goal for me. So we set up our life in a way that we can do the most important work at the best time, right? And that's how we use alerts and understand that flexibility. So when it comes to the question of how much is needed regarding account size for swing trading, it's not a one size all fits number. So let me tell you that most of our trades are in the $300 to $500 per contract range. So ideally, what I like to do and teach is that you have 3 contracts. So for example, you would need approximately, let's say it's a $400 contract, you'd need $1,200 to take that trade. Now, if you want more than one open trade, you'll need more in your account. And as we continue tonight, I promise it's going to come together. So once again, a minimum account size would be in that $5,000 to $7,500 range. Gang, you would no sooner start a business underfunded, and trading is a business. And I do only trade long calls and long puts. Gang, we keep it very simple. I see some of the questions about spreads and butterflies. Nope. Long calls and long puts. Everything that I do and the results that I'm going to show you are just that simple. No complicated trading strategies. Long-term growth. So listen up. This is one of those things a lot of traders overlook. Long-term growth. So long-term growth trading are trades that we plan to hold for 6 months to several years. And by the way, I'll be showing you examples of all of these, gang. Sit tight. We're just getting started. So monthly meetings. So every first Tuesday of the month. Remember, think about your schedule. Think about your goals. For me, I get together the first Tuesday of the month with the members and we go over these strategies. We look for potential setups and we review our positions. I do that once a month. We don't want to overmanage these types of trades. What I use for this style is shares or leaps. Leaps are simply a longer dated option. So if you buy an option that expires way further out, let's just use some generic terminology, they just call it a leap. It's just a further dated option. That's all that it is. And once again, because I'm managing something very slow, I will set up trade alerts for myself and for members. And then we post the setup. We always post the setup before the trade is taken. Again, it's really important you have time to look at the setup, understand it without having to be at your desk all day long. You can tell freedom's a big deal for you, Rag. It is. And long-term account growth trades are something that a lot of traders overlook. When we go through the examples, you're going to be blown away by what can be done. So this time frame is for those of you that are looking at, say, 6 to 12 months or longer. The goal is maybe buying a house, college, retirement. The list can go on. Going back to your goals. Another thing to keep in mind is that each time frame may be better suited at certain times. So we're going to talk about different time frames. Time frame for day trading, time frame for swing trading, time frame for long-term account growth trades. But ultimately, the best way to reach your trading goals is to understand each time frame, each one of these styles, and be fluent in each one of them. That's what I do. That's what I teach. So let me show you how it all works together, right? The synergy, if you will. What we're looking at is a P&L for my swing trading account. So remember, I have 3 different trading accounts. This is my swing trading account from 2025. This is a year at a glance. A very fair and frankly never-ending question I get is, how much did you make on your trades? Here it is. I started with a $750,000 account and ended with just over 1.8 million. Do not get stuck on the numbers. Recall I said my strategies apply to any account size. The important part is that your P&L can look like a steady uptrend. Notice I'm not taking massive drawdowns. I did have 5 weeks where I had negative. So not every week was just up, up, and away. I had 5 weeks where I did have a negative week, right? And sometimes the P&L was kind of a shallow rising growth. Sometimes it flattened out, right? That's just trading life, right? So don't get stuck on the numbers. This applies to any account size. You want that steady trend without all the crazy drawdowns. 2025 yielded a 140% return. So whether it's growing from 7K to 14K, 20K to 50K, the point is consistent growth. And not just for 1 year, but year after year. This is what we're talking about tonight. Keep in mind, I'm sharing with you what I've learned and done year after year for 30 plus years. Was every year this good? Oh gosh, no, gang. But I've never blown up an account. I've never had a negative year. Negative weeks, negative months, sure. All right. Tonight is about learning the skills to have your own upsloping P&L and incorporating them into your trading at just about any account size. Options contracts that I traded in this account, once again, were typically $300 to $500. A couple might have been a little less, a couple might have been a little bit more. My average expected return per trade is between 50 and 100%. All right. Here's a question a lot of folks ask too. There's no spreads, right? These are long calls, long puts. There are no complicated option strategies here. At the money or slightly in the money options. When people say, Rog, are you buying out of the money? Never. At the money or slightly in the money. I'm a very conservative trader. I play high probabilities. Trading more often, more hours, never wins the long game. Trade smart and informed. This is where you will see your consistent growth. We want and frankly need a rinse and repeat system to succeed at trading the markets. And yes, 2025 was a great year. And not that anything is guaranteed, but I will say this, given what we're seeing on some of the data points in the macro that I'm looking at for this year, 2026, I think 2026 is going to be an even better year filled with opportunities if you know where to look. All right, so another common question I get is, where do I find you? Where do I get these trades and trade alerts? When are you doing your trading? All of the trades we're going to be looking at and we'll continue to look at tonight are trades we've taken in the mastery. Monday through Friday, we spend the first 2 hours of the day looking for, executing, and managing our trades. Remember, first hour, second hour. The first hour is 9:20 to 10:30. It's dedicated to day trades. That's it. 10:30 to 11:30 is dedicated to finding swing trading setups. And then again, to fully cover all the time frames, once a month, I'm going to look at the long-term portfolio positions. So again, think about your schedule. So by the way, along in this schedule, you'll see we have weekly tech sessions, scalping sessions with Lorna. This is home base, right? For those of you that are wondering, this is where I do my trading, and this is my schedule. So we trade the plan and not the emotion. So before we get into some specific trade examples and breakdowns that made up the account growth that we just went over, let's talk about the indicators, lines, and colors that you are going to see on my charts. Please do not get stuck on what they are, because I will be telling you all about them while we look at the trades and the charts. I'll walk you through the setups. You do not need to have this, but I will tell you, my analysis starts with these automated color-coded tools, because this is where I get unbiased data that takes away the emotion and helps me simply trade, right? What the market is telling me. Sadly, most traders fail due to emotions, right? How many here? Yes, the emotions make me crazy. It's the emotions. It's not a lack of intelligence. The right tools give you this non-emotional clarity. All right, so what am I using and what are you going to see on these charts? So we all have a map that we can look at together. We're going to see the indicators here, but don't get stuck on these because I'm going to explain them as we go. Just know that collectively they're called the top tier pro tools. So when I'm referring to the tools, you know what I'm talking about. They look at more than any of us could possibly do on our own. They take away emotion. They let us unbiasedly see what the market is telling us. You will see in a moment. And this is where I start my analysis for every symbol before I trade. Let's get to the charts and what we've been doing over the past year. All right. Again, we'll look at all of these tools. I'll explain all 6 of them, what they do, and why they're so important to understand this, to put trades on. All right. First up, this is the QQQ. All right. So let's break this trade down. In this trade, we bought the QQQ. Now, the first thing I want to point out, here's the symbol and there's the time frame. Rog, what time frame do you trade when you're day trading? A 5-minute chart, not a 1 minute, not a tick chart, not a 2 minute, not a 3 minute. My main decision-making time frame, as you can see here, is a 5-minute chart. So what I did is I bought the QQQ from the hourly price movement range. Do y'all see this green zone down in here? Automated color coded. That is what told us that 365 was the right point of entry to buy QQQ calls. So what is an hourly price movement range? So these are red and green shaded boxes that you're seeing on the chart. Green zones are support, red zones are resistance. And this is the proprietary price buster tool. If there's a cheat code, this is it. Hourly price movement ranges take the last 6 months of price movement and puts it together so you can have a very data-oriented expectation of where price is likely to go in the next hour. It's actually an algorithm, right? Such a big word, but that's what it is. So recall we spoke about trading futures and options. Okay, so my futures and options traders, listen up. This trade could have also been taken with the NASDAQ futures, the NQ or the MNQ, right? So if you're a futures trader looking at this QQQ, saying, Rob, could I have done this instead of QQQ? That's a lot of Q's in that statement, right? Well, yes, right? So this trade could have been taken with NASDAQ futures, micro NASDAQ futures, as well as what we did, the QQQ ETF, which makes the way the trade is set up and the way you do your analysis so important. With unbiased, truly, we're looking at the chart for all the levels. They're defined automatically. This means the same setup is applicable to futures and options trading alike. And here's why we can do this. When trading NASDAQ futures, right? When trading NASDAQ futures, we're looking at NQ, right? But when trading QQQ, what are you all looking at? Well, I'm going to tell you when trading QQQ, I look at the NASDAQ futures. And why? It's already been trading for hours since 6 p.m. the previous day, well before the bell. And what it does is it offers a more complete look at the price behavior. The difference between larger and smaller accounts is the number of contracts you can afford to trade, but the setup stays the same. So yeah, a $5,000 account could have traded a $365 contract, right? It's truly just a matter of how many contracts that you trade, but the gain per contract remains the same. In this case, the profit was $920 per contract. All right, so a lot of you might be wondering, okay, Rog, what about risk? The risk on the trade was $92 per contract. The reward was 5 times the return on risk. So you made 920 bucks, risked $92 to do it. One of the other questions I get, and this is a great question, is how do I choose the expiration for the day trade? Right? Okay, Rod, what strike or what expiration for that are you taking? For something like the QQQ, it has a contract for every day, Monday, Tuesday, Wednesday, Thursday, right? I will choose the current day as the expiration date. Don't pay for more time if you're not going to hold it for longer. It just makes the trade more expensive. Yeah. Now, if this were Apple, for example, that does not have daily expiration, I would typically buy the Friday expiration of that week. All right. The Friday expiration. All right. Next up, let's go to another example here. Now, this is the S&P. So again, take a look at the upper corner here. This is the S&P. So I have a 5-minute chart of the S&P futures. So this one's a little bit different because we're talking about a futures contract here. Same idea. I bought the S&P as it sunk down into the green zone of the hourly price movement range. So again, I'm looking at automated support based on historical volatility, telling me that 62.86 and 3/4 was where the support was. That's the level to buy from. So a question that we can ask is, how do I know this isn't going to go lower, Rob? Because golly, it's sold off so hard. Most traders might short into that. Let's look at what the multi-structure does for us. So along the very bottom here, you'll see another indicator. It's 2 rows of colors. What does this tell us? The top row of colors is momentum. The bottom one is trend. Green is bullish. Gray is neutral. Magenta is bearish. So just go by the colors. By the way, these are actually looking at 4 different moving averages interacting with one another. All right. And it gives you the momentum and the trend. So why is this important to know? Because it confirms whether the market is trending, moving higher with higher lows and higher highs, or if it's chopping. It tells us if it's bullish, more likely to move higher, or bearish, more likely to move lower. And this tells us whether the setup should be for calls or puts. So if you'll notice here, the structure was in an uptrend, went gray or neutral. This is not a bearish market despite the drop. And that's why we went with the buy. Or in other words, you could buy calls on SPY, you could buy the ES. And what I did is buy the ES. So what common mistakes do traders get into if they don't have something like the multi-structure to give them some directional understanding? They'll expect breakouts when there's low probability of follow through, or breakdowns, right? Or they'll short at the top, or they'll try to buy the bottom, expecting, again, a bounce or a pullback. Simply put, they'll take the trade in the wrong direction. So how could I have done this with options? I'm sure a lot of you are saying, Rog, I don't trade futures. How could I have done this with options? The options could be SPY and SPX, and I would use the same trigger. So just like earlier I said, if I'm trading QQQ, I'll use the NQ. If I'm trading SPY or SPX, I'm going to track the ES futures for the same reason. It's already been trading for hours. It's more complete data. So that's why the levels can be the same, because the S&P futures reflect all the different symbols associated with the S&P. ES, MES, SPY, SPX, XSP. All right. So what the trade was that we bought, we scaled out, and from top to bottom, this was a scale out of 15.25 points, and then a scale out of 23.25 points. Each point is worth $50 per contract. All right. And that's what we did with the S&P. Looking at the structure, telling us it was okay to buy despite what looked like a really scary sell-off, landed in support, and that's what set up the trade. All right, the next example, we're going to move from day trading to swing trading. Again, we will take questions. So I think a lot of the questions, if we kind of stick with the slide examples, you'll see what I'm doing, see where I'm trading from, what I'm looking for, the time frames, the expirations. And then we will definitely leave some time for Q&A. So for sure, stick around. I will definitely get to some Q&A. All right, so let's talk about swing trades. We talked about day trades before. Today trades, 5-minute time frame, buying expirations, either the 0 days because we don't need more time, or if it's only a Friday expiration, buying that Friday expiration. All right. So swing trades, if you remember from earlier, holding overnight, a few days to a few weeks, right? We're going to hold these potentially for several weeks. For many traders, looking at this chart, they see an uptrend and think it's gone too far. How many traders have been there? They look at something going up, oh, it's just gone too far. It's gone too far, right? And they buy puts or they short it. Why do traders tend to do this? Because the most natural inclination when not already long is to presume it's got to come down. It's a kind of a revenge trade. What's the problem with shorting this or buying puts? Because while at first it might look like it's working, right? The bounce often comes very quickly and in the direction of the overall trend. Take a look at the multi-structure down here. Similar to the hourly price movement range in how it measures price action, for swings, we use the daily price movement range, or the DPMR. So since we're talking about swings, I'll just use a different tool. Instead of measuring hour by hour, it's measuring session by session, and that's my support. So you'll notice how much the multi-structure helped, not only telling me that long was the only side. Look at how bullish it was. Long was the only side I should be looking for a setup, right? In other words, when you have that support, you know to buy calls. Now, another thing that was really helpful is the color of the candles. All right, so these are called top tier candles. And what they're measuring is trend and participation. And they plot green, by the way, just in case you're curious, if price is above the 34-period exponential moving average, just for those of you that are techie and are curious. So what we're doing is measuring the trend and we're measuring participation, which was overwhelmingly bullish. Nothing but bullish candles here. This is how the system works together for you. To make things even simpler, another powerful way to determine whether a move will be higher is whether there are at least 5 green candles in a row. I won't even think about buying something unless I see 5 candles that are showing bullishness. In fact, if all I had were these color coded top tier candles, that alone would make the difference between a good trade and a bad one that does not follow through. So this is where the rinse and repeat set of tools and strategies takes you and your trading to the next level. You have a process, you have trusted tools, and you let automation find the uptrend, wait for the pullback, and ride with the trend. Was there any reason to not stick with the trend here? Look at all the green. It's a constant visual reminder. A trade like this is another great example of how to grow an account. In this case, one option contract nearly doubled from $585 to $1,100 when the trade was closed. Do this over and over, and you've got consistent growth in your account. Now, what about risk, Rog? What about if you lost? What if this trade, for whatever reason, there was bad news or something negative happened and it went bad, right? I get that you won, but what if this was a loser? How much could you lose? Well, we always predetermine our stops. The risk was $146.25 per contract. That was the risk. So if this went bad, this would have gone 585. I'm not going to do the math in my head, but this would be losing 146 of these dollars. That's what risk looks like. So the risk per contract, 146, the reward per contract, 1100. All right, so what expiration do I use for swing trading? All right, generally, I'm going to look 2 to 4 weeks out, and it's dependent on the trend. If I have a trending environment, I'm going to want more time. If it's a little bit more choppy, I might need less, but generally it's going to be 2 to 4 weeks to expiration. So again, you don't want to cut yourself short. You want to give a trend time to keep going. That's really important. All right, now that you're getting the hang of the automation, how many of you are looking at the indicators and the colors saying, Brock, I think I'm kind of getting what you're doing here. Now that you're getting the hang of how the automation takes away the emotions, right? I'm not guessing. Tells us what the symbols are doing in regards to price level, support, resistance, trends. Let's see what else our charts can tell us for this trade setup. So in this example of XOP, and those of you that are unfamiliar with XOP, this is oil and gas explorers. When might you want to look at this? When natural gas and crude oil are moving together, all right? Now, how do we know this was a buy? And from where? Notice the top tier candles were consistently green. So make sure you kind of look at this chart and count out, all right, 1, 2, 3, 4, 5. All right, we're consistently green starting about there. Awesome. Now I know to start looking for a bullish setup. Not that I'm going to buy right there. And now I start knowing that bullish is the direction. The gray zone of the daily price movement range automated the entry. Now we got into this towards the end of July. Sorry, the end of June, as you can see there. So I put the date there so you can kind of see on the chart where we kind of got in. I know there's more data here because I wanted you to be able to see the candle colors. So the idea here is that we knew the gray zone of the daily price movement range is that automated volatility-based buy zone. That's an entry. Now we start to see how these automated tools work together. Now you might say, Rob, this wasn't a consistent trend, but notice it was mostly neutral or green bullish. Don't short. Things are slow, but they're starting to get bullish. You have to trust your gauges. Now there's another tool on this chart called the Darvis. Right here you have a pair of yellow lines. This shows me where the support is without any guesswork. This is automated on the chart. So the lower one is support. The upper one would be resistance. When we add in yet another tool here, so I'm going to show you one other tool on this screen, and I wanted to always call one of my indicators the secret squiggle, because I think indicators are kind of these funny secret squiggles we all love. This one's loosely based on a slow stochastic. And if you have been a student of an indicator that is an overbought, oversold tool, you know that there's an overbought level, there's an oversold level, and there's a midpoint. All right. And that's what you can see there on this screen. So if you take a look, we add that secret squiggle, which is that curvy line at the bottom, and we use this for our chop or non-trending markets. Not everything's going to be trending. How do we trade something that's not trending yet, but it's bullish? Its job is to identify support and resistance in chop or a sideways market. In this case, the secret squiggle confirmed the test of Darvis support, which is right in here, while testing that 50% or that midline. Pretty cool. It all came together. So Darvis support, it tested the daily price movement range, and in a non-trending but bullish market, take a look at the colors of the candles, we knew it was most likely to continue to the upside because it never broke that midpoint 50% of the secret squiggle, never broke the Darvis, never broke the daily price movement range. So this is why when you put it all together and you've got something like the secret squiggle, love that name, this is why it's so helpful. It has one job, just one job. Tell us whether price is overbought, which is resistance, oversold, which is support. And when it holds that support line like the 50%, this is excellent confirmation. All right, so what was the risk on the contract, Rog? What if it all went bad? Yep, we saw that this trade went from 325 to 1465. Great trade. The risk was about 80, I think it was about $80 a contract. So if the 325 dropped by $80, I closed the trade. I'm not using max debit. I'm not risking all $325. Here's another helpful strategy to implement in your trading when it comes to losses. Gang, listen to me now, believe me later. Cut them quickly. My guideline is if the option that I bought is down 25% for what I paid, get out of the trade. So whatever you paid, while that option price is in the zone of our chart, I risk 25%. Never max debit. I don't hate my money, and if you're here, neither do you. Here's another setup in XME. All right, so when do you want to look at XME? When metals get moving, too many traders miss out on the metals and mining sector. That's XME. Trading ETFs is yet another very powerful way that you can look at movement, all right? It's a power move that many overlook using the ETF. Copper, gold, silver, they're all powered by copper, silver, gold. When we look at the collection of metals, right, XME is going to move with them. This is how we understand how index or commodity, sector to stock work in finding symbols to trade, and it goes back to how I build a watch list. I don't use a scanner, but rather I look at this alignment of the charts. If copper's moving higher, I'll go look at metals and mining. Within metals and mining, there's a number of stocks. I can look at the stocks within them, like, for example, Freeport-McMoRan. The charts tell us where the movement is. We start with that alignment. Start with the index or the commodity. See how the symbols are moving. That takes us to the sector, in this case, XME, and potentially an individual stock, right? But in this case, we knew the ETF was where the position was most likely to follow through, and that's why we chose the ETF. This is because nearly all the high-weighted stocks in XME were moving higher. XME climbed with the strong metals environment and with the automation of support and resistance, in this case, Darvis, those automated lines here, the levels are super easy to see. Buy the support in an uptrend with the green top tier candles. And the price action takes care of the rest. In this case, it was a move from 260 to 925 per contract. So this is really an important one, and I hear this problem a lot. For traders who have trouble hanging on during strong moves because they're fearing dramatic pullback or there's bad news or something, the multi-structure tracks the momentum and the trend, once again here down at the bottom. And that's giving me visual guidance. It's literally holding my hand for each candle, telling me, don't worry about it, Rog, it's still bullish. Candles are green, Momentum is bullish, trend is bullish. It's candle by candle guidance. So remember that the number of contracts is where trades fit into many different sized accounts. Smaller accounts, 5 to 7K, you bought, say, 3 contracts at $270 and closed them out at 925. So you multiply 3 by 925, small accounts, pretty doable. If you have a larger, say, $20,000 account, maybe you bought 6 contracts and you sold them at 925. The trick is knowing how many contracts you can afford to trade. So here's my guideline on this. All right? I want to write this down. My rule is on average, 3% of your account size can be risked on any one symbol. Now, I might have 2 or 3 different scale in trades, 3 different entries on one symbol. I will only risk 3% on this one symbol, 3% of my account. Too many traders who are blowing up, what are they doing? They're risking far more than that. And they see that crazy, dizzying P&L roller coaster ride, right? Okay. So this is a great example how you can trade gold. And gold has been a great one, not just for this trade in 2025, but it's in fuego again this year. So this is the gold ETF or GC we're going to talk about. Now this chart, by the way, the time frame that I'm looking at here is the daily time frame. These swing trades have been on the daily, all right? So this is gold futures. Gold futures trading in an uptrend. I'm sure many of you are already seeing it. Okay, Rag, I got my 5 green candles. I got the uptrend here. Got it. I'm starting to see it, right? It is the gift that keeps on giving. So once there are at least 5 green candles, it's a go for a bullish setup. And the top tier multi-structure with the uptrend, trust it, good things are about to happen. In this setup, price moved lower into the daily price movement range. It triggered the limit buy for the long entry, 39.81.5. And there were multiple entries. I'm showing you one, right? There are multiple entries here. You can see, okay, Rag, I'm starting to see how many times those green candles were dipping down into that zone. The follow through was strong with the uptrend, as would be expected when the indicators line up with the gold futures, right? What's that? Hang on, the Trish Boss trying to say something. Okay. Trish Boss is here, by the way, my mastery folks. Trish Boss is in the house. My right hand. All right, so follow through was strong with the uptrend, which we would expect with the indicators. It lined up on gold futures, right? The closing price was 4,300. Yes, this is a leverage contract. It was a whopper of a profit. But what about GLD? What if you wanted to trade GLD? That went from $730 to $5,080 per contract. What was my risk? 25% of what I paid for the option. So talk about automated, no emotion, reliable risk and repeat tools. Every one of these symbols and every one of these setups use the same tools and the same core setup. Just rinse and repeat. Next example. All right. Now this is where we're going to shift gears, right? So the time frame on that gold trade was a daily chart, Tony. So swing trades predominantly, I'm going to use the daily. Okay. All right. Now we're going to switch over to something very different, but really powerful. And this is called the long-term account growth. Trades will hold for 6 months to years. All right. Now we're thinking retirement, college, home, whatever it is. This is another time frame we can use as part of growing our money. Now, we talked about 5 minutes for day trades, daily for swing. This is the weekly chart. It's a weekly time frame that I have up here. Use the skills and the tactics of tools from trading, but what we're doing is significant growth over time without day-to-day or frankly, even week-to-week babysitting. This is as close to set it and let it go as you can get. Why is a stock like Walmart good to have in your long-term account? It's a staple stock. When looking at consumer staples, consider it's one of the 3 P's of market resilience: power, pills, and toilet paper, utilities, healthcare, and consumer staples. People need the goods from these companies in good and in bad times. That's what makes it so great for long term. Now, where do we buy at? We bought at $85 a share because price reached the mean reversion. All right, what is that? That is the wave. That is the historical average that price is typically going to pull back to. How do we know that's the right place or the right time to buy? When a market is trending higher, strong support is usually at this historical mean. This is where the buyers were waiting. And you can see that. There was some volatility there, but it gave us a really good entry. We can confirm this further since our tools leading up into that mean reversion were green. They lost a little bit of their mojo for a while, but the candle stayed predominantly green. And then lo and behold, what happened? Here comes a trend again. This is why we don't pick tops. So right there, you can see where the tools kept us on the right side, right? It kept us looking for buys. It kept us in the long. All right. Next up, RKLB. All right. How do I know when to buy RKLB? And again, this was a setup in our Sector Secrets Mastery. This is in our long-term account growth portfolio. This one happened just a few weeks ago. Is it a trend? And how would I know it's gone on sale? Well, this is a mean reversion. And that's what the wave tells us. The wave, again, these three lines, this historical average that price tends to return to. You can see it did it back here, did it again. So these aren't just one-offs, gang. All right. Notice how the uptrend also accompanied the wave. If there is no uptrend, my mean reversion traders out there, listen up. If there is no uptrend, there is no mean reversion or pullback to the wave. There is no pullback buy if there's no uptrend. This is an easy way to ensure that the mean is indeed a valid strategy. Again, the automation helps reduce errors, speeds up analysis, increase accuracy. This again is roughly the 34 EMA. That's roughly what this is, but I only want to use it in a trend. That's where the multi-structure comes in, right? The mean means that this level is highly likely. This is a highly likely place where price is going to return to time and time again. In this case, again, the wave was support, and that is where we bought the RKLB leaps. Now, when I buy leaps, listen up. How far out do I buy leaps? Again, just a further dated option. I want to be at least 12 months from expiration, as this gives the trade enough time to benefit on the longer term weekly strength. Again, longer term, 6 months, 12 months, longer. Remember, we measure long-term growth in months and in years. Now, why leaps? Also, sometimes buying shares isn't as cost effective or simply is just unaffordable. So leaps can fill that gap. It gives you more leverage than you can afford with just buying shares. So in this case, we bought the 18 December 2026 leaps. We bought the 40 calls. So these aren't going to expire for another almost 12 months. Well, 11 months, right? The entry was $1,525 per contract, which remember, we have a lot of time to expiration and time is money. Our first scale out was $2,300. This allows us to recoup some of our investment. We moved the stop to break even. Currently, the last I checked, these leaps are trading over $5,000 per contract. And these don't expire until middle of December. All right. If you bought shares, by the way, you bought shares from $42, and currently they're somewhere around 70 and change, I believe. This chart might be a little dated. I think it's actually even higher than this right now. It's 5,500 right now. Thanks, bot. So there you go. RKLB. Again, notice we're using the same tools, just a different time frame, different time expectation or time horizon. So anytime you have a long dated option, Caroline, they're called leaps. Yeah, so if it's further out, that's just what they're called. It's still a further dated option. All right, here's another trade that's part of the growth we've seen over the last year in our accounts. Again, another long-term example. The Darvis consistently showed support. That's its job. And this is visible. It's evidence that buyers are stepping in. We are never alone in our winning trade, gang. Remember that. We're never alone. We need the group to eventually follow along. And the key is to be using timing. Be early, not late, to the predetermined entry level. And the Darvis set up the entire trade before the crowd got in. We saw the support, we bought it, and then everyone else saw it later. The momentum was bullish. Take a look at the multi-structure down here at the bottom. The momentum was bullish, even though the trend was neutral. But remember, bullish sideways markets are more likely to bounce off support and rally. That's what this did. The bottom line is, gang, trust your gauges. If you overthink your setups, if you start to let news and rumors and whatever chatter seep in, you're going to overthink them. What we want to do is automate them. Take the bias and the confusion out. Have a system, a sort of checklist that tells you what needs to be present to take the trade. For us, it's the visuals of these indicators. It's the visual of the structure. It's a visual of the support, right? Know how much you can afford to trade. Recall I said I don't risk more than 3% of my account on any trade and not more than 25% of the cost of my options, right? You've got to spend most of your time building your watch list. Notice if I've automated all of this, what's my real job? Finding trades that have the right structure. You want to be sure you're doing the right thing for the right symbol. You can put on the most perfect long call position, but if it doesn't have the probability of follow through, you're not going to get the results. Put it all together the right way, and you'll likely be taking your trading closer to your trading goals. It's that simple. And what are your trading goals? Well, again, it was trades like this that made for a banner 2025, and I am looking forward to an even better 2026. So that sounds pretty good, right? So far, putting some of these pieces together. A fair question of thinking is great. All right, Rog, how do I get all this put together so I'm not spending years learning and I can see the consistent account growth that I'm looking for? I've got my goals. We thought about them together. Yeah, it's time. All right. Being consistently profitable is possible. If I haven't conveyed that, it's part of a system. Rinse and repeat. There are multiple time frames to suit your needs. Becoming fluent in each is possible. Day trading, swing trading, long-term account growth. Using indicators that are automated makes trading possible without emotion. We trade what we see, not what we think. Understanding position size and risk makes account growth possible, right? We talked about risk and position sizing as well. Reaching your trading goals, gang. Don't let anyone tell you, and don't be discouraged by the negativity around how many traders fail. They are not trading with a system. If you are, reaching your goals in trading is absolutely possible. And that brings us to the Sector Secrets Mastery Accelerator Program. This is where you will see the acceleration that takes your trading to the next level. This is your golden opportunity to figure out what's holding you back and where you can see your trading knowledge take the right turn. Each package includes membership to the Sector Secrets Mastery from 60 days to 1 year, depending on which package you choose. In the Mastery, this is where we do our work. We build the watch lists. We find the setups. We manage our trades, plus address the strategies for each time frame and asset class, all in a live trading environment during premium market hours. We'll be actively trading the markets and discussing the trades together 10 hours a week. Those 2 hours that I put together in terms of my schedule, that's the best hours that I've found to achieve my results. Plus, you're going to get another 3 hours of support and scalping strategies with the Lorna bot. And that's just the live room portion where we put our skills to work, because we're actually doing our jobs during these sessions, right? We're actually trading during these sessions. There isn't time to deep dive into all the nitty gritty and the great questions you all have of the various aspects of trading. So with that in mind, this is where your accelerator portion takes place. For 8 weeks, we'll be getting together 1 to 2 times a week for specially curated topics so you can hone your skills one topic at a time. So imagine if we could meet for coffee, you and I, and talk about all your trading questions. This is what these 8 hours of weekly sessions with me would be like. So let's look at the topics for our 8 hours of sipping coffee and helping you reach your trading goals. So take a peek, and each week, starting off on Wednesday, January 28th, and every following Wednesday through March 18, we're going to be meeting at noon Eastern to 1 p.m. This is our coffee time, or tea time if you'd like. Our deep dive on everything you want to know in Ask Me Anything time. This is where things get really exciting because I'm taking over 30 years of experience, putting it all together for you and sharing the habits, strategies, and the things I look at and why they matter to help you get a complete look at the world of trading, breaking down one topic at a time. For those of you that are newer to trading, the good news is you'll create stronger habits this way. And for those of you that have been trading a while, well, I can't make guarantees, but this is where you're going to fine tune your skills in a minimal amount of time. Time is money. Stop spending your time trying to figure out why you aren't seeing the results you're looking for. I've been at this a very, very long time. I've done the homework, frankly, made all the mistakes, right? Blood, sweat, and tears for you. And here are the answers in Cliff Note style, designed for you to succeed. We're going to cover topics such as how to get in and out of trades, what we call scaling. We're going to help you manage your risk. We're going to figure out how much can you afford to trade in your account, when to take your profits off the table, no guesswork, when to let winners ride, how to minimize losses so they are barely a blip in your P&L. No more roller coaster P&Ls, gang. Understand time frames and what fits into your schedule, your risk tolerance, and your interests. What do you do with economic events? We know that, oh my gosh, we've been inundated with so much that. How do you deal with that? How macro views can help you understand what's going on in the markets and keep you on the right side. I didn't spend too much on this tonight, but I will tell you this. I'm seeing a lot of very positive macro ahead of us, macroeconomic factors ahead of us in 2026. It should be a very profitable year, and I really hope you'll be reaping the benefits of your hard work. This program is the smart part of the hard work. So just imagine how you can transform if you can avoid all the pitfalls. So even after you and I sit down for our coffee for 8 hours, that's a lot of coffee. We're going to be working side by side in the mastery, applying our skills for yet another 10 hours a week, 10 hours of live trading a week. There's even more you get with this accelerator program. It's another 3 hours with Lorna to talk about even more topics. Yes, we've thought of everything and put it together for you. What do I need to consider when picking a broker? What types of charting platforms? How do I buy the right option? What features are on my option chain? How do I set up an alert so I can free myself from the desk? Yikes, what are all these options? Right? No pun intended. The tech part can be overwhelming, but I assure you it's an invaluable gift. If you know how to use it, too many traders are feeling way more frustrated than they have to. Tech becomes a constraint, doesn't need to be. We're going to take that out of the way. Then there are those who want to understand more about futures. Who wants to learn more about futures? Lorna's going to be chatting with you on this topic as well. So even if you've been trading a long while and think you've got it down, these are great refresher sessions. You're going to go, oh my gosh, I forgot that, or I missed it the first time, right? 8 hours with me, 3 hours with Lorna, just for the accelerator portion of the program designed to help you accelerate your trading goals. And for those of you that are already Sector Secrets Mastery members, I've seen so many of you here, we have a special package for you. So you can just join us each week to tweak, refresh, and grow your skill set. This offer should be there for you through the class link. If not, my sector members, give the office a call. They'll take care of you. All right. So the mastery is included with all packages, right? The length of time depends on the package. This is our room schedule on the screen. Now remember, you're going to be with me 10 hours a week, 2 hours a day, live trading every week. So you're going to learn and then you're going to trade side by side with me. Monday through Friday, we spend the first 2 hours of the day together. Bless you. This is where we build our watch list. Every Monday, we set up our trades. We manage our trades. 9:20 to 10:30, we're looking for day trading opportunities. And 10:30 to 11:30, we're doing our swing trading work, finding those setups, and then I alert them to you. Then to fully cover all the time frames, once a month we're going to get together and go over those long-term portfolio positions, things like Walmart, RBLK, AbbVie. Look for new ones every single month. Along with those sessions, you have another 3 hours a week with Lorna. Weekly tech, 2 scalping sessions. Bring your questions. These are very interactive live sessions. But wait, all right, there's even more. Okay, gets even better. Just to highlight a few more features you get with your mastery. Weekly notes. All right, my personal weekly notes. If you can't be in the room all the time and you want to clarify something we went over, here is your resource in written form. What we talked about each day, notes I made about the session. Imagine having my trading notes and having access to that. We share that every week. Daily trade review. You want to know what we've traded and how things worked out each day? I send a daily recap out. You'll get that daily review of trades we've taken in the room, what we have, where we've gotten in, where we've gotten out, whether it's a win, whether it's a loss. Tracking the trades is very, very transparent. Real-time trade alerts. All right, this is where you will get the setups for the trades that we're talking about. Next time we get into gold, you want to know, right? There'll be a trade alert. Trade alerts are just that. They're alerts, a heads up of the setup that we're looking to trade. In fact, it's an entire trading plan. You're getting my trading plan in alert form. Everything that I know about the trade and everywhere that I'm going to react, that is what that alert is. The price we're looking to get in at, the targets, the stops, and any important aspects to the trade that you need to know to manage it with confidence. The sessions that we have live are archived every single day. Every live room session is recorded. So if you can't make it that day, no problem. You can go catch the recording. It's recorded for you. All right. My premium package, folks, includes the accelerator breakout sessions, the 11 hours over 8 weeks, and the mastery that we spoke about, plus all of the indicators that I've talked about tonight. That top tier pro toolkit, the squiggle, the multi-structure, the candle colors, the automated support and resistance, right? Plus the daily price movement range and the hourly price movement range. Those automated zones you see that I use so much, you get those and a subscription for 90 days plus another 2-hour check session. So you get a subscription to the HPMRs and DPMRs for 90 days, plus another 2-hour check session to get those indicators up and running, how to install them, get them on your charts, getting them the way you want them to look, right? Of course, everything is recorded. And the tech sessions being recorded is amazing because people always want to go back and review, rewind, and just make sure their charts are the way they need them to be. By the way, as the famous philosopher Ferris Bueller said, life moves pretty fast. If you don't stop and look around once in a while, you can miss it. Truly, this accelerator program has covered what it has taken me over 30, it's almost 38 years to learn. And we're going to share how to find success with you, golly, right now. Okay. All right. So we talked about the top tier tools. All these tools make up the top tier pro toolkit. So if you want to, yeah, Rog, what is part of that toolkit that I'm getting? This is the toolkit. And these are yours to keep with the premium and the elite package. HPMRs and DPMRs are included in the premium package for 90 days. You get a 90-day subscription. For the elite package, you get an entire year. By the way, gang, on the elite package, not to mention you get the mastery plus the PMRs plus the indicators. If you were to add that up separately and go buy them a la carte, right, the value you're getting at the elite is insane. All right. Don't take my word for it. You can see. Price movement ranges, by the way, need to be updated every 2 to 3 weeks to stay accurate. That's part of the magic of how they work, and it's included in these packages. By the way, we have over 100 symbols in the HPMR and over 100 symbols, the most popularly traded liquid stocks and options in those packages, in the HPMR and the DPMRs. So again, what you're getting is an algorithm that's putting together 6 months of historical data with those accurate pinpoint green and red zones and the gold and gray zones. All right, elite package. The elite package includes everything we've spoken about, plus it extends to the mastery membership 1 year, along with 1 year to the HPMRs and DPMRs. So imagine where you can be a year from now, gang. This is where the transformation of an accelerator program can change your trading life and get you where you want to be in your trading journey. That's a year with me and those indicators. The elite package, that elite package includes everything we've spoken about here, but you get 1 year of mastery membership. All right. Hang on. Trish Boss is telling me something really important. All right.
You skipped slide 34.
I skipped it.
Tech session.
Oh, the tech set. Oh, the tech is really. Trish Boss said I skipped the tech session. Oh, yeah. Okay. So the tech session, by the way, gang, is Friday, January 23rd, 12 to 2. And this is really important because it's great to have all these tools, but if they're not running on your charts, right? So this is definitely something you want to go ahead and put in your calendars. So January 23rd, 12 to 2 p.m. So you talked about the elite package. All right. And gang, we will answer questions. So yeah, sit tight and I'll be happy to answer some more of your questions. You bet. All right. So if you can't make the sessions in the mastery, the deep dive sessions, the bonus sessions, the tech sessions, gang, everything is recorded. Everything is recorded. You can go back, you can review at your convenience. So the elite package is the rocket package for sure. 1 year of the mastery alone is $2,470, $2,470. The HPMRs and the DPMRs are $799 per year each. So that's over $4,000 just for those subscriptions. Just so you know what the value is in that elite. Add in the 8 hours of the accelerator deep dive sessions with me, 3 more hours with Lorna, plus 2 hours of dedicated tech to get your tools up and running, right? This is how lives are changed. Get the information you need, get the support you're seeking, get the camaraderie of traders like yourself. The community at the Sector Secrets Mastery is unbelievably positive, supportive, and focused. The daily practice of putting your skills to work in a think tank of knowledge. This is how you transform your trading without spending years and years trying to piecemeal things together and become the trader you know you can be, that you want to be. Consistently profitable on your terms. Again, we talked about goals, right? Your time frame, your account size, your risk tolerance. So again, imagine where you could be in a year. I'm even thinking about it, going, God, I can't wait to see where you all are in a year from now. And this is what members are saying. So you can read what they're saying. Congratulations on finding the right people to start your journey. Nopium's already gone on the journey, making great progress. Again, this is what members have to say. This is where people were and where they are now. I'm looking forward to you being in this. All right. So this is what we're trying to do, gang. We're trying to put it all together. We want that upsloping equity curve. By the way, if you want more information, need more support, we got your back. Feel free to call the office or email them with any questions you have. My mastery members, you do have special pricing. I saw that question a few times. Reach out to the office, but you should see that special pricing if you're already a member of the mastery. Interest-free payments with PayPal credit. Use it if you need to. It's there for you. And let's go ahead and take some questions. Liza says, I love being a Sector Secrets Mastery member. I love it. I love it. If I sign up for the Pro package, would it be possible to upgrade? Upgrade? Yes. Do I use TOS? Nick, TOS and TradingView. You can use any broker you like. Any brokerage is fine. But for charting, I would recommend TOS or TradingView. TradingView is broker agnostic. All right. So the elite, if I understand, this includes daily sessions for the entire year. Tony, you got that absolutely right. So not only are you getting the 8 hours with me for the accelerator program, then you're going to trade by my side Monday through Friday from 9:30 to 11:30. Yes. Don't forget those bonus sessions with the tech session, the scalping with Lorna, and then once a month, the long term, but you got it. That's exactly what you get with that elite. It's a killer package. The interaction of the members is awesome. Thank you, Brandon. We have some great members. If you're just yearning for a room where people are going to help you out, Stay focused on trading and not the hogwash of whatever today's drama is. If you want focused, positive people to trade alongside with, you're going to love the Sector Secrets Mastery. Faraz, you do get alerts. Absolutely. So I send out the long-term account growth alerts and the swing trade alerts. Yes. And you trade live with me for the day trades. Okay. Let's see what else you've got here. The size of the group, David, is never overwhelming. I've been doing this for a long, long time. So whether it's a group of 100 or a group of 1,000, we always say, get your question in. And a lot of times what you're going to find in this kind of setting is you're definitely not the only one with that question. And everyone else's questions really contribute to the overall conversation. Yeah. Let's see. Gregory, the top tier indicators are yours. So once you sign up for either the Pro or the Elite, yeah, those are yours to keep. The only thing that's a subscription is, of course, the room itself, depending on which package you get, and the price movement ranges. All right. What else do we have here? Bear with me. What trading platform? Chili Bee, you're free to use any trading platform you'd like. But again, for charting, I would recommend TradingView or Thinkorswim. If you don't want to use Thinkorswim, no problem. Use TradingView. It's a fantastic platform. And all the indicators that I've explained here today that I use are available on TradingView. Is there support available after the 8 weekly sessions? Remember, HP, not only do you get those weekly sessions with me, but you're going to be in the room with me, right? So if you just finished up an accelerator program video and you say, hey, I'm going to see Raghee that following Thursday. If you have a question for me, you can ask in the next accelerator, but you can also ask in the room, right? You're going to be with me for however long, whether that's 60 days, 90 days, or a year. So you'll have access to me at least 2 hours a day. All right. Let's see. Scott, if anyone has questions on if you have the current, if you have grab candles, Scott, top tier is absolutely an upgrade to the grab or the tops platform. Top tier is. And the best way that I'll tell you to pick up top tier is anytime I have a class like this. You're always going to get a far better deal than if you just bought it on its own. Zafire says, as a recently joined member, I can testify that all the questions I see you naturally asking get answered by Raghee and Lorna. Platforms, how to load the proprietary indicators, how to size your trades, how to manage your budget, all the rest. No kidding. Zafire, thank you so much. Awesome. Let's see here. If you already own one of the indicator packages, gang, call the office. They can help you out, all right? Does the accelerator program include the daily trading room? Absolutely, yes. So if you buy the basic, it's 60 days, Bruce. Pro is 90, and Elite is 1 year. So you'll be with me. Yep, every one of the packages includes live trading with me Monday through Friday. You bet. And the alerts. Absolutely. The sessions are all recorded. Every session that we have is recorded. As far as Robert, where do these charts come from? Where do I place the trades? What platform do I use? The basics. Will we teach that? Francine, 100%. Yes. We'll tell you what platforms we use. TradingView is one of the easiest and most cost-effective. I mean, it could be as low as $9 to $14 a month. It's very inexpensive if you want to use something like that. And yes, we will walk you through how to set up either TradingView or Thinkorswim. TradingView is very popular, and you can trade with any broker because its job is just to give you charts. All right. What platform are my sessions based on, Pablo? Usually TradingView or Thinkorswim. But again, the broker you use to execute your trades with, that's totally up to you. It makes no difference. It makes no difference. All right. Brian says a huge benefit of the membership is really learning discipline too. Brian, absolutely. It's instant accountability. And I'll tell you this, when you're in the live trading room with the other traders who are taking the same steps you are, a lot of times other members have been where you've been not all that long ago. And a lot of times members help the other members out and saying, hey, I ran into that same roadblock too. This is how it made sense for me. So like I said, very, very supportive group. I've never traded options, don't even know how to place an order. Robert, I buy calls and puts. It's really straightforward. In terms of could this be basic enough for beginners, be patient with yourself. Do I think you could learn the process in 2 to 4 weeks? I truly believe you could, because we're not putting in sophisticated selling premium and spreads and all sorts of complicated strategies. Buying calls and buying puts is a very simple, frankly, the most simple strategy you could possibly use. And simple doesn't mean beginner. It just works. And like I said, 3 decades later, that's all I do. All right. Let's see. Bob, Raghee, the best. I appreciate that, Bob. Thanks for being here. How much of your total account should be in the market, Roland? I'll tell you what, one of the things we didn't talk about, because obviously we only have so much time together, but I give you all in the Sector Secrets Mastery, and this will be part of the accelerator program as well. We've even automated taking your account, determining your desired account risk, and it will automatically give you how much allowable dollars you could. No one's telling you how much to trade, but we give you an automated formula for that with a spreadsheet, and it simplifies that process. And you can fine tune that to your risk tolerance. Okay. All right. What else do we have here? Do these strategies work in choppy markets as well? Led, a number of our trades were not in a trending environment. If you recall from some of the examples, not all of them were in an uptrend, right? RKLB was not for the long-term account growth. XOP had lost a trend, went into chop, but because we know to differentiate between trend and chop, focusing on a pullback versus oversold support, yes, it works in choppy markets as well. Trending markets by far lead help traders make the most money. That's period, right? Trends are always the most powerful. But we're going to deal with chop, and the indicators are absolutely going to help you deal with that. The first key is rinse and repeat, right? What is the structure? Therefore, what indicators am I going to use? And we teach you all the process for this. But yes, this will work in chop as well. What else do we have here? Do I leap still have a 25% strategy? M. Lee, again, there's a position sizing guide that I teach you all to use. Some of our traders like to budget for 25% stop loss. Others, and I give everyone the choice and the process for it, like to use 50. So it's really up to you, right? This is really not about a blind trade along in any way. This is an accelerator to mastery of trading, day trading, swing trading, long-term account growth trading. So I'm going to teach you the process for everything. Yes, we automate the analysis, but you're still very much at the helm for how, when, and if you take a trade. But you'll have the process so that it suits your risk tolerance. Because if it doesn't, it's not going to be a sustainable process for you. All right. Why are there gaps between Darvis boxes? David, it's not that the Darvis isn't valid any longer. We just look at the most current box that the process has automated for us. All right. Do I go at the money for leaps too? Great question. I sure do. I sure do. So again, if you're looking at an option that expires, I believe it's 12 months or longer, a longer dated option simply called a leap, L-E-A-P. It's actually an acronym. Tools are amazing, process is amazing, teaching is amazing. Thanks, Fly. How are you doing, my friend? Awesome. All right, I think we've got, are 5 green candles equal to 5 straight days of closing higher? Trend scalper, very interesting question. No, that's what hurts a lot of traders. They think that everything in a trend has to be a higher close. That's actually not true. And the top tier candles do not get fooled by down closes but still in a bull market. So no, it does not. But part of the code is whether or not the candle's trading above the 34 EMA. And one thing you'll learn in the accelerator, gang, nothing we do is a black box. I open up and tell you, okay, this is what this is based on. This is what this is calculating. Because if you don't understand what the tool is doing and why, you'll never be able to understand it. That's one of the benefits of having the accelerator, to give you the confidence in, oh, this is what this tool is considering. Now I understand. It's not just mystery as to why it's printing a color or printing a zone or printing a line. All right. Let's see here. What else do we have? Kenneth, as far as supply and demand, so let me break some myths. Supply and demand is the same thing as support and resistance, which is the same thing as buying and selling, which is the same thing as ceilings and floors. What separates all this lingo is why is that level there, right? Supply is resistance, demand is support, period. And different groups of traders throughout the decades have just used different languaging. Right now, that's the current languaging around support and resistance. But why is a support level there? Volume, price, volatility, right? Why is a resistance level there? Or why would we expect demand at a certain level, right? That's all that it is. It's just an evolution of lingo. If you were trading with me back in the late 80s, floors and ceilings was the lingo. Then that slowly became support and resistance. Then it got popular to call it bids and offers. And it kind of went back to support and resistance. And right now, the sort of languaging is supply and demand, but it's just support and resistance at the end of the day. All right. The daily price movement range, Tom, is a custom algorithm. It considers up to 6 months of historical volatility. It's a calculation that I created based on historical volatility. And it does work on TOS, and it does work on TradingView. All right. Anything else? And again, gang, I saw a few folks ask about deltas. I do not use Greeks. You don't have to be troubled by them. It's just one of those things that makes trading a little bit more complicated than it has to be. But generally, TW, between 50 and at 70 at the most is my delta. Okay. Slacker is asking, can you show the P&L for the 190? Can I tell them about next week? Yeah, we'll be going over that, Slacker. I didn't have time today. It's actually more than 190. It's actually well over 210 right now, and we will be going over that in the future. Yes. It's actually over 210 with the surge we've seen. Yeah, so next Thursday, we're going to continue this conversation. So hopefully everyone signs up today. We'll talk about some more detail next Thursday. You can join me in the room as soon as you sign up. Remember, the sooner you sign up, the sooner you get the indicators, the sooner you start joining me live in the room. But we're going to be talking about 2026, and I'm going to talk about one of the losses that I took in 2026. I'm going to talk about the current open swings and how I got to actually over 200,000 in profit within the first 15 days of the year. And a lot of the members will tell you, actually one of the members this morning in the room said they're up 49% this month. One of our members. So, and yeah, we have quite a few of our members in this room right now. All right, gang. So thank you for the question. I think we went through the bulk of them. So I promised I'd go over them. So thank you so much for the questions. I'm looking forward to seeing you in the accelerator program. Looking forward to you all getting your hands on the top tier pro tools, the PMRs, and being with me in the chat, in the live chat. Looking forward to seeing you tomorrow. So when I see you in the morning, let me know that you saw me tonight. We'll introduce you to the room. We'll welcome you. I'm looking forward to it. Tomorrow's a big day too. It's going to be a good one. OpEx. All right. And then next Thursday, we'll be getting together again. Very cool. All right, gang. Be good to each other. Thank you so much. Head on over to simplertrading.com/accelerator. And I will talk with you all soon. Be good to each other.